I want to talk about the dollar and gold. Currently, the Trump administration is pursuing a weak dollar policy. That is called the Mar-a-Lago Accord. They want to reduce the deficit, and the way to do that is weaken the dollar, making U.S. goods cheaper. So when foreigners buy our products, it's cheaper. It would reduce the trade deficit. There is a problem with that, though. It's also going to make companies that import goods more expensive, like electronic companies, clothing companies, consumer parts, machinery. So there's a double whammy on that. What is interesting is, and what a lot of people don't realize, is that gold is priced in dollars. So a weak dollar makes gold more expensive. A strong dollar makes gold cheaper. Right now, he's pursuing a weak dollar policy, making gold more expensive. Today, the dollar dropped, so gold was up 0.5%. So that's great. We can buy gold in our portfolio. Most financial advisors, most of my friends in the financial industry own GLD. It's very liquid traded. It trades the spot gold. And if gold rises, they make money. But if gold does have a correction like we saw recently, it's kind of come back from its correction, you could lose money. But here's the problem. There is risk in being in gold. If Trump succeeds in his policies, then we can see the premium in gold go away. We can see gold take a pretty good hit. And we saw that when there's a global crisis like 2020, everybody sells everything. Gold is one of the first assets to be sold. So how do we get into gold and not have the risk of gold? Well, do what we do at IPS Strategic Capital. We believe in hedging. What if I could protect the downside from acquisition price, but appreciate in the upside, get 80% of the upside? But if the market goes down, if gold does have a correction, we're protected if we hold it to maturity. So if gold is up 10, we're up 8, gold's up 20, we're up 16. Still capturing a majority of that upside, but capturing none of the downside. We call the no risk zone. For our more aggressive clients, we can actually leverage the upside and we can hedge the downside. So if gold is down 40, we're only down half of that, 18. But if gold is up 40, we're up 60. A much better way, a much better mousetrap than just owning long gold, just like every advisor and every client buying gold. Just buy gold and hope it goes up. Well, the way we manage money, you don't have to hope. You could strategically invest. You could win if you win and not lose if you lose. Best way to invest. It's our secret sauce, IPS Strategic Capital. We do it better. Thank you for listening.